everyone, welcome back to the channel. My name is Sebastian Boyer, the approved guy, and on today's video, we're going to be reviewing what is velocity banking. So without further ado, let's get right to it. All right, so velocity banking is a strategy of leveraging debt to pay off other debts and eventually to leverage debt to increase wealth, both faster than just using extra cash flow. It also is giving every dollar that comes into your personal economy at least 2 to 3 jobs before you put it back into the world's economy. The basic principles of velocity banking are strategically paying off debt, accumulating interest, transferring interest, canceling interest, compound credit, and taking advantage of the rewards currency through points, cashback, and flight points on credit cards. Now, disclaimer, velocity banking is not for everyone. If you don't have the discipline or the patience, creativity, vision, flexibility, or longevity to practice velocity banking, then before you start doing this, do your research. You may need to start with something more conservative like debt snowball. That's where you basically put all your debts in order from greatest balance to smallest balance, and you attack the smallest balance with your extra cash flow. You pay your minimum payment on all the other debts, but you pay as much as you can towards the smallest debt. This gives you faster results on a smaller debt, so you feel confident. You feel like you feel rewarded. You feel like you've made progress because you can usually pay that smaller debt off a little bit faster, and so that you can get started. So this is a way to get started using debt snowball. Velocity banking is taking it to the next level where you really have to have the discipline, patience, creativity, vision, flexibility, and longevity to really practice velocity banking. This is not something that you're going to get results in a month or two. No debt strategy is. It takes time. It can take months. It can take years. If you're talking about shaving off 15, 20 years of debt and interest off of your life cycle, then this is something that you're in for the long haul, and you have to be ready to practice this for the long haul. So take your time. To begin practicing, you're going to need to get your hands on a debt tool, which could be a line of credit, a home equity line of credit, or credit cards. And you're going to use that line of credit card, home equity line of credit, as a way of making chunk payments to your debt. And then you're going to put your income back into the line of credit. That's the most simplest way to put it. Now, obviously, for each person, the amounts, the dates, the times, and exactly how you implement this strategy is going to be unique for each person. Alternatively, you can set up an infinite banking policy, and instead of continuing to pay monthly payments and leveraging debt from a bank or lender who you're paying them the interest on, you can basically become your own bank using a whole life insurance policy with high cash value. And you can use that policy sort of like a line of credit where you're borrowing from the policy. So you're borrowing from yourself essentially, and you're becoming your own bank. Okay. With a life insurance policy, infinite banking strategy, what happens is the policies are very liquid. You can typically get between 80 to 90% liquidity or cash out of the policy in the form of a policy loan. The money that you put into the policy in your premium, or if you put a large amount into the policy in one shot, is tax-free growth. There's guaranteed growth, there's guaranteed rates, and there's also dividends. You're going to own your debt. It's self-completing, which means that if you expire and your demise comes prematurely before anticipated, because this is a life insurance policy, the death benefit will be issued to your beneficiaries. And if you set this up properly, you can have it set up so that it will take care of all of the balances on all of your debts before being dispersed. So ultimately, with an infinite banking life insurance strategy, you're able to have complete control over paying off debt, owning your debt, and building wealth, perpetual wealth, with compound interest, tax-free growth inside the policy. And because the policy is going to pay dividends, you're going to be able to benefit from the insurance carriers' investments. And historically speaking, they have done very well. So it's a very safe place to put your money and experience growth. The policy loans are secured by the death benefit, which means, yes, you should make payments. I recommend payments back, and you use the policy loan like a line of credit. However, if you never pay the policy loan back, as long as you maintain your premium and you take care of your policy, you do not let your policy lapse, you never actually have to pay back the loan. So you don't have to pay back the loan. And obviously, it's in your best interest to, because you can use it again and again, and your arbitrage between the interest earned in the policy versus the interest on the loan is going to get bigger and bigger. Now, if you're not paying back the loan, then it's still going to have an arbitrage. You're still going to have growth in the interest inside the policy, but it just won't be as much. And then on that death benefit, they're going to take the loan and whatever interest out of the death benefit. So if you don't pay it back, that's how the carrier recuperates the loan on the death benefit. So they collateralize the death benefit. Again, I do recommend paying it back, definitely maintaining your premium, never lapsing your policy, and so then you can use that account again and again for the future. Life insurance is going to protect your liquid assets. So if the money you put into a life insurance policy is free from litigation, so that means no one can sue your policy. That includes bankruptcy. And just a tip for your personal tangible assets, such as real estate, vehicles, or other assets, you can put that in a trust, and then that's also protecting your tangible assets. So you protect your liquid assets inside these policies, and you protect your tangible assets inside of a trust. Now, if you really want to learn more, I do offer a Velocity Banking 101 Masterclass, and on this class, it's a one-on-one virtual session. We're going to connect and share screens. I'm going to go over all the rules, exactly how to begin and properly implement your unique strategy and plan. It's going to be a personalized look at your 4 numbers. So I'm going to provide you with a 4 numbers workbook to set that up in advance before the session. And we're also going to design a unique illustration to show you how an infinite banking policy might work with your strategy. So ultimately, you can become the bank. You can also request a free consultation by clicking the link below in the description area. You can go to theapprovedguy.com/velocity banking or metalifeplan.com/velocity banking, and again, schedule a call. Or if you'd like to go ahead and enroll in my Velocity Banking 101 Masterclass, I'll see you on the session. If this video was of value to you, please like, please subscribe, please share, and click that notification bell for future videos. As always, thank you for watching. I'll see you again real soon. Make it a great life.